Welcome to The Foundry, where leaders are forged daily. Each week we investigate themes of leadership, entrepreneurship, and mindset with some of the greatest minds in real estate. And now, the data scientist of real estate, George Roberts.
Welcome back, passionate investors. Today, I have the pleasure of interviewing Sam Wilson, founder of Bricken Investment Group. You may know him through his podcast, the How to Scale Commercial Real Estate podcast. I'm going to talk a little bit about that in a moment, but really what I like to do is I like to let my guests sort of introduce themselves. So that I will ask Sam onto the show. Welcome to the show, Sam.
Thank you so much for having me. I certainly appreciate it, George.
Yes, and I always like to start this interview by saying, if you're at a cocktail party and somebody asks you, what do you do? How do you like to answer that question?
I have no idea. That is my answer. I have no idea what I do. It always gets a laugh because we've got our hands in way too many things that keep us way too busy. And I say one day when I grow up, I hope to know what I do for a living.
I like it. Well, it's good to have your fingers in multiple pots. And one of the pots you had your hand in for a long time, or your finger in, was one of the most successful podcasts in the industry. I noticed you got 182 five-star reviews on Apple. Not a bad track record. That's some consistency there because it was 5.0. So good work there. But all great things must come to an end. So can you give our audience the perspective of a recovering podcaster?
A recovering podcaster. Yeah. I mean, it was a culmination of a lot of things. We did 903 or 4 episodes. Yeah. And at its heyday, it was getting 40 something thousand downloads a month. It was great. I got to meet great people like yourself. I really enjoyed the process of going through it and building, of course, the network of people, from doing the podcast. That was great. But, like you said, all good things must come to an end. I am an introvert, George. I'm an introvert. I can go days. I don't because I'm really, really busy. So I'm on the phone all the time, probably like you, but without talking to someone, and it probably wouldn't hurt my feelings any. I don't know what loneliness feels like. I'm sorry to those that do. I'm an introvert, man. It's the way it goes. And so I found a couple things. One is that we were going through some really hard times in business, which I'm happy to chat with, some deals we were involved in, still involved in.
Yeah, we're going to talk about that.
Yeah, that were very, very difficult. And it kind of just made me rethink and reframe our entire business. And one of those was, all right, do I want to be devoting? Because I would devote every Tuesday to pod. I mean, it was a daily podcast for 2 years. I know there's others out there like Joe Fairless and Whitney Sewell and those crazies that do a daily show. And I couldn't keep up and decided I didn't want to. So I hung up the cleats on that and just said, hey man, it was a great ride and I enjoyed it along the way, but pivot is, it's okay.
Yeah, beautiful. So I think that that speaks to a lot of things, like scaling down. So your podcast was how to scale,
Yep.
but scaling down can have its advantages as well. And I think you did mention some of what went into that, which is that you do have your fingers in a lot of pots, and you had to decide what was really producing the most value to you.
Yep. You said it. That's it. And we're still trying to, pair off things as the timing makes sense. And I think that's part of it is figuring out, like you said, where do my values lie? What do I want my life to look like? What do I want our income to look like? And how much is enough? Answering all those questions and just deciding that, hey man, you know what? For some people, swinging for the fences and doing doing what it takes to swing for the fences and taking the commensurate risks that go along swinging for the fences. I think that's one of the things, again, we'll talk more about that. I said, man, it's just not worth it. The clock ticks the same for everybody, I've heard. So why not spend my life doing the things that I enjoy, and maybe we won't live large like we possibly could if I want to put in the effort, but maybe I'll live large in other ways, in contentment and those
Maybe you
sort of
live a
things.
little larger. So I
Yeah.
love it here. I'll just take a moment to shamelessly plug my book here, Passionate Living Through Passive Investing. So you might notice I changed the headline to my show, talk about the passionate investing community. And one of the things that I think is important is deciding, how much is enough? If you've got the capital to do what you need to do, you can continue investing, and why not enjoy home and life and family, hobbies, whatever it is that you love to do.
Right. Right. That's it. That's it. And we're not there yet. I'm still kind of digging out of some of these, missteps along the way, but we're working on it. 2025 has already been a whole lot more peaceful than the beginning of 2024. So that's, it
Okay,
looks like
yeah,
we're
yeah.
making progress.
2024, very difficult. Rapid interest rate rise that we dealt with for now. I think, well, let's see. We want to keep this timeless, but since I think it was the middle of 2022, we saw interest rates jump up quicker than they ever have, at least in our American history. So you mentioned actually a couple of times, and this is something I wanted to ask you, setbacks.
Yeah.
Now, I like to say that success is a poor teacher. And I also like to say that smart people learn from their own mistakes, but the wise learn from the mistakes of others. So, if you could, somebody who has really grown in this industry and who has created so much value, if you could share what are some of those mistakes or missteps and how did you dig out, I think that would probably be better than a whole hour of talking about all the things you've done right.
Oh, for sure. For sure. Tuition has to get paid, right? Every education comes with tuition attached to it. And
Yes.
so, this is what I call wisdom's tuition. It's the price that you have to pay to
Right.
hopefully someday become wise. I don't, you said it another way, you said it more eloquently than I just did, but something about, what it costs. But regardless, yeah. So, I mean, where do you want to start? There's been a few of them that we're both in the middle of learning from, and then also kind of on the tail end of. And I think a lot of people got involved, and myself. I mean, I'm here telling you all the things I've done wrong, which is great. But in the hype of maybe 20 to 2022, and I participated in it, am still participating in it. There's a lot of kind of fervor around certain asset classes. There was probably a lot of risk that I was taking on that I didn't understand, quite honestly. Didn't understand as well as I should have understood, both as a passive investor and as an active investor. A lot of that being the things we talked about: interest rate risk, debt risk, maturing, what the timelines on that debt is, taking short-term debt, going, hey man, we got 3 to 5 years on this debt to figure it out, to make the business plan go round. We're seeing stuff, turn in 18, 24 months. 5 years feels like an eternity, compared to 24 months. Well, suddenly that 5 year or 3 year timeline, just for myself and a lot of other people, just wasn't enough. Even with
Yeah.
experienced operators, it wasn't enough. I mean, there wasn't it was the overpayment of assets coupled with the rising interest rate. So cash outs became impossible. Cash in refis became and are probably still part of the vernacular that people are using now when talking deals with sponsors and why things aren't going right. It's like, well, we're going to cash in refi. That's a dirty word, but it's part of the process. And then we got involved in an asset class where we brought a bunch of money to the table with another sponsor that I didn't fully appreciate the challenges associated with that asset class. And I also didn't appreciate the challenges that this particular operator would face when dealing with this type of asset class they hadn't faced before. For me, I looked at it, looked like a home run on paper. I was like, okay, this is easy. It's a LIHTC project. There's great upside. We're buying it right. We got time on the debt. We've got a great business plan. We've got,
Yeah.
money in the bank. All the things looked like, from, outsider's perspective, that's going to go well. And it just didn't. And so not until it
Yeah.
was too late. And
Right.
basically when they had sold the deal, they came back and said, oh, hey, by the way, we lost 60% of it. And we also ended up taking the other 40 and doing a seller carryback just so we get it off the books. We were afraid we were going to lose all of it altogether. It's like, oh crap. Well, yeah. Anyway, we can get into the weeds on that one, but that's one
Yeah.
highlight of
Well, I
some.
think just to get a little bit into the weeds on that, because LIHTC, now that's something that has fascinated me. This is a low income housing program that allows the government to essentially subsidize, but subsidizing in a sort of a roundabout way. Can you explain how does LIHTC actually work?
I don't know. There you go.
Okay.
There's how does LIHTC work? If I had to
Yeah.
explain it, I probably couldn't do a good job of it. But it's like you've said, it's a low income housing tax credit
Yeah.
program where, you take on a LIHTC project, has to meet certain, adjusted median income for the area. And then, rents are reduced and or covered by the LIHTC program. So then you get to submit reimbursements to the state, and then the state sends you money for what the tenant didn't pay. And I mean, it's kind of a paperwork nightmare from what I understood. And if you're going to do LIHTC, you got to have a property manager that has deep experience in LIHTC, which we didn't have. So
yeah, exactly. You got to keep some percentage under, a certain point. I think it's like your county median or something, but you got to also sell those tax credits. It's not like the government just gives you the money. They give you tax credits that you can then sell. And you got to try and get 90% on the dollar is what you're shooting for.
Yeah, it was a mess. It was a mess. So, I mean, yeah, on that, I'd say unless that's somebody's business model and that's exactly what they know exactly what they're doing, man, that's a complexity that I wouldn't add back to the mix unless I really.
Yeah, beautiful. Well, any other mistakes or missteps, difficulties that you overcome? I think, again, that's huge. Getting into a new asset class. I mean, for me, redevelopment, that was new to me, something I got a little thumped with. You mentioned tuition. It's not like you can just pay it all at once in a lump sum at the end. Sometimes the tuition is ongoing, so I understand what that's like. A lot of these redevelopment projects I've noticed have been in trouble because interest rates are going up, hard to refinance. All of these projections, not easy. And if you were 3 or 4 years into your project in 2022 when those rates shot up, yeah, it's not like you can just hit that 5-year mark. At that point, it doesn't make sense. And now maybe it's beginning to make sense in the beginning of 2025, but you might have easily blown that 5-year deadline.
Easily. And even on stuff that's going well, like we've got a project that's, it's I mean, I don't remember what we paid for that, 18 million, something like that. It's going great. It's like 90, it's a class B apartment complex, 98% occupied, right? I mean, every single metric we're hitting is above pro forma, except for two things, insurance and taxes, right? Our income, we're exceeding our pro forma on rents across the board. We're exceeding our pro forma on occupancy across the board. Economic occupancy, we're winning, but we did not hit taxes and insurance properly. And so it's like, suddenly we're not making distributions to investors, even on a deal that's performing very well. And that one, I mean, so it's things like that you go, wow, we took on risk that I didn't understand entirely.
Well, it's hard to appreciate because the insurance market, that's something that has just recently, we've had hurricanes, other natural disasters. We've had the market, particularly in Florida, literally implode. And that's why I like the idea of margin of safety. You've always got to have the margin of safety because risk, when it materializes, is probably not the risk that you identified. You have to identify the risk. You have to approach it, like a PPM and say like, hey, these are the things that could go wrong with this investment. And then realize that although planning is essential, the plans, once you meet the enemy, are worthless.
That's correct. Yeah, that's absolutely correct. So yeah, those are things that, going forward, we'll take into account if we even take on an asset class where insurance and taxes can tank the whole business plan. Like maybe that's not even part of what and I won't probably, because again, we're scaling down really more than up. I mean, everything we're doing now is either in-house with our own capital or with a very small group of lenders that we work directly with. And that's, just keeping it simple, and where things like that can't necessarily capsize the boat without knowing about it.
Yeah, beautiful, beautiful. Well, speaking of capsizing the boat, one of the things that happens with equity is ending up underwater, and this is why I like debt. So yeah, I would say there's two somewhat competing philosophies in investing. One is that risk and reward go hand in hand, and that to get more of the latter, you have to accept more of the former. But the other is that the first rule of investing is not losing money. And I think it's plain to see that I favor the latter approach to investing. So, can you tell us why you favor? I think lately you've gone more from raising equity to raising debt.
Yeah, two thoughts on that. One is that because we're doing smaller projects, like for us, the stuff that we're doing is now, I mean, we're not dealing with 8, 9, 10, whatever, because that's probably too many, 7 or 8 figure projects. It's like, anywhere from $100,000 to $300,000 projects. They're small stuff. So I, as a capital raiser, I'll say that, favor debt to our investors. One, because, you know, they get a fixed rate of return. They get an ACH in their bank account every month. It's an obligation for me to pay them. We have a certain sum of money set aside that says, okay, here is for debt service, and they're short-term projects. I think people right now, there's so much risk where everything we're doing should turn in under 6 to 9 months, maybe a year if it's really long. I haven't had anything go over. I have one project that's over a year, but that was kind of an intentional thing. Outside of that, it's all short-term stuff. So investors know what they're getting. There's a monthly payments to our investors. I know what we're getting into. I don't have to worry, quite honestly, going back to the beginning of our conversation, George, as an introvert, right? One of the things that's always hardest for me, and I still do it, is monthly investor updates. I know it sounds petty, but it's like, oh, crud. It's the first of the month. I got to write investor updates. Crud. That's communication. Yeah. Guess what debt investors care about? The ACH into their account.
Yeah, when you see that ACH every month,
right.
I'd like to hear the details, but I need to see the ACH.
Right, exactly. Right. And most of the time, they don't even care about the details. Here's the ACH. Oh, hey, here's when we're selling this. I need, this payoff statement signed, send it to them. And they're like, okay, great. And then they get paid at closing. It's like, okay, so you're still backed by real estate. You still have a first position lien on the property. You're getting paid every month. I mean, it just kind of ticks a lot of boxes for both my investing style, my own kind of, being an introvert and not really loving communicating all the nitty gritty details on what I'm doing every day. Cause we're out working it, man. We're working hard. And the last thing I want to do is like stop and write an email about. I'm a great operator, just not a great communicator. So all that said is that's why I've kind of gone to the debt model only, where it's like, I don't want to be responsible for making sure that you hit your equity returns and that you feel good about the project and all this. I just want to make sure that I've done exactly what I said I'm going to do. The lines are very clear. And that's kind of why we do what we do now.
One more reason to be on the debt side I would not have considered, but all the things you said, reasons I'm going a little bit more towards debt, or at least diversification, because it's nice to know that you get paid every month. And like you said, I mean, what's the worst case scenario? That you foreclose on the asset and then you get most of your money back.
Right.
It's a lot better than equity.
And to be clear, well, for sure. And that would be if I were raising debt for other projects.
For others, but you have a different model.
Right. I'm only raising debt for our own stuff. I mean, and that's kind of been one of the other things I've come to the conclusion of, is that any deal I've had that's not worked out the way I wanted it to was when I let someone else be in charge. And I don't say that to say I'm great, because I'm not. I've made my own mistakes, no doubt. But, I've never lost money on my own deals. And so it's like, well, why not be the guy that drives the bus? You can get on, you can be a lender to me. That's fine. The responsibility is all mine. And I don't have to go to anybody else and wonder, hey, how's this project performing? So that's and again, that's smaller thinking. I know it's smaller thinking. And some people are like, but we're a multi-billion. I don't really care. I'm happy doing what I'm doing. And
right. Well, small can be safe, and safe is good.
Yeah.
So I love it. Beautiful. Good stuff. And yeah, I gotta say, debt has its advantages, but again, I like to be the one owning the debt. So I'm kind of on the opposite side on that, but not really though, because again, you get to keep all the upside then. And since you like running your own projects, that's great. Well, how about this? I'd like to talk about entrepreneurship. That's another huge theme on this podcast.
Sure.
Now, I know you were on Billy Keel's podcast some time ago, and you mentioned that your father was an independent do-it-yourselfer type, and you kind of joke about how that made him categorically unemployable. But of course, those are great entrepreneurial techniques or habits, which you also say you thank him for passing on to you. So, can you tell us what sort of traits do you find are most important to an entrepreneur, or can you sort of expound on that? What is it about entrepreneurs that makes working for someone else just so categorically unappealing?
Right. So I think this is true for anybody you're not used to taking orders from somebody else. One. So, and you also always are hunting the most efficient way to get it done. It's like, how fast and how well can we do this? Like, those are questions you're asking. And when you get stuck as a cog in an organization, man, the friction that you find from bureaucratic processes, from having to go through other people in order to get something approved that you're like, dude, I'd have been done with this a week ago if you just move. Like, get out of the way. Yeah, that's the type of thing, is that would make me
Yeah, and the risk
unemployable.
aversion, that's another thing I find in the corporate environment that was not to my liking.
Right.
They're more afraid in many cases of not making a mistake rather than doing something that's going to actually produce new revenue.
Correct. Yeah. Yes, but precisely. That's exactly it. And those are things. It's funny. Previously, I would have thought that anyone can be an entrepreneur, and I see things all the time where I'm like, it's not for me, but I see what people can do, and I'm like, hey, if you just took that skill set you've got right there, you could turn that into a small business that would provide very well for your family. And they just kind of look at you like deer in the headlights, like, I can't do that. I'm going to go find a job. And I'm like,
Exactly.
maybe you can't teach this. I don't know. But for me, it's one of the blessings and curses of being an entrepreneur is that you see opportunity everywhere. And so it's my no button has gotten really, really big and my yes button's got really, really small. So that's
I love it. Well, that's success for you, right? I mean, you've done enough things, you figured out which few things you like to do, and you can say no to all the rest.
right, right. And that's great. It's a great spot to be in, no doubt.
Yeah, beautiful. Well, hey, another one of your greatest strengths that you listed was creativity. There's generally a way to turn lemons into lemonade. I love that. But my favorite was equanimity. At least that's what I'm going to call it. You say, I try to hold things with an open hand, good and bad. When both come and go, I try not to let it affect me. And I thought that that was very philosophical. So, what is your trick to keeping an even keel?
Yeah, that's a good question, George, here. That the trick there, I guess, just realizing that this is all temporal, right? Like, none of us get out of here alive.
Right.
So I always joke, and when I go to the gym, I'm 43 now, but when I go to the gym and I'm nursing a severe tendinopathy in my right arm, I'm like, man, my rental suit's wearing out, right? It's like I don't get to keep it. So I guess coming at it from that perspective philosophically is like, I'm not here for long. Life is really, really short. So we can get wound up and get really, building our own kingdoms. And, I don't know. You can spend a lot of energy focusing on things that don't matter. That's
Yeah.
the reality of it. And so when, I feel like I've also been dealt a healthy dose of just watching, all of God's children do some really dumb things at various times where it's like, oh, well, like that's the way it goes. We own a bunch of retail stores here in Memphis, and here recently we've had a rash of just really dumb things happen at those facilities with theft and vandalism and burglary. And it's just like, I think in 1 week, I was had 4 different police reports going on at the same time. And I'm like, okay, oh, well. And everybody else like, guys, like, aren't you worn out? I'm like, no, it's just, it's a part of the course, man. You
This
just
is
keep
owning real
moving.
estate. What do you
This is
mean?
this is owning right. This is owning real estate. Of course, there was somebody discharging a firearm at 3 a.m. in the middle of the store. Why not? It's what we do. So yeah, I
Am
don't
I
know.
allowed to ask about these? Are these ongoing investigations?
They'll never. And I'm sorry, I won't talk bad about my city, but no one was injured.
Good.
It's fine. We've got it all on video for posterity's sake, and that just goes in the file of people in Memphis. So off you go.
Love it. Okay. Well, here, I want to talk more about Memphis in a minute, but so has taking a philosophical approach to life, has that made you a better investor, do you think?
Uh, Probably not. I should probably. I'm sorry, George. It's not the answer you wanted, is it?
Well, I think it's probably makes you a better person, but it sounds
Maybe a
like it
better
already has. I
person.
mean, if you can handle 4 police reports at one time without um, going bonkers, I think that you probably do have an edge over your peers you're not giving yourself credit for.
Well, I think when you just get punched in the gut, you just go, okay, well, I mean, that's the way it is, man. So you pick up and keep moving. You keep doing the things you're supposed to do. You keep doing the right things. And I've got more than I need. That's the other reality, right? Dude, I got more than I need. My kids are well fed. I'm overfed. I mean, you can't see below the third button here, but I'm overfed at this point in my life. And it's like, yeah, I got more than I need. So I can't complain.
Good. Love it. Love it. Okay. Well, let's circle back to real estate. So, actually, Memphis. I feel like I've heard a lot of good things about Memphis in terms of rent increases. At least I'm looking more on the residential side. Sounds like you've got
Right.
retail out there. Yeah, residential also have trouble with people discharging firearms.
Right.
Yeah, I've,
Right.
yeah. I'm not going to say too much about that, but at least I've had threatening on my property, and it's not great to hear, "Hey, unit next door threatened me with a firearm yesterday." Oh, okay, well, I'll just go knock on their door. I'm sure they're going to be friendly.
No, that's probably not a good idea. Not a good idea. Yeah, Memphis rent increases. I mean, Memphis it's got a lot of great things going for it. There's a lot of big headquarters here. There's giant corporations. It's a very interesting city to live and work in. I will say that. Lots of great people. You don't come to Memphis to lose weight, but you can eat very, very
You
well
got
and
blues
listen
and
and
barbecue. I mean, what else do you need? Is there, am I missing something? Yeah, blues, barbecue, and Elvis. How's that?
blues barbecue Elvis. It's actually
Mississippi River.
Mississippi River, and it's one of the like financial powerhouses actually in the states. Behind New York City, you got so many bond trading firms, like commodities trading firms. I mean, there's a ton of money that passes through Memphis via the markets, and you kind of don't think of it as one of those towns, but it actually is.
Yeah.
So anyway, all that said is that you just have to know what you're doing. If you come to Memphis, you have to know really where you are, what you're dealing with, what you're buying, who you're buying it with. I mean, it's a great city, and it's also a city that you just have to know very, very intimately to know if your investment is sound or if you're just about to give away all of your money.
Yeah, interesting. Yeah, obviously every city has its rougher parts. I think South Memphis is a little rougher.
Yeah,
Yeah.
yeah, yeah. I probably wouldn't take a house down there if you gave it to me, but that's all right.
All right, love it. Okay, I think I've exhausted my Memphis knowledge, so maybe we'll move on from there.
Fair enough.
I know one of your other great passions is Austrian economics. Now I'm going to blow this, but I just read a book this week by Murray Rothbard. I think it
Oh
was
boy.
Toward a New Freedom. So
Okay.
I know that's something that you appreciate, Austrian economics. Anything you want to say about Austrian economics and our current situation?
Oh, well, I would say yeah, I mean, I'm no intellectual, George. You're a lot smarter than I am. I got drug into the Austrian economics kind of group by my wife who, loved it and and I think it's great. There's nothing I think philosophically I probably don't agree with as it pertains to Austrian economics. The one thing I would say that is a must read for anybody is Henry Hazlitt's Economics in One Lesson. That's a
One of
book
my favorites. Can,
you've
can you
got to.
summarize that for us? Because I think that it's really beautiful. I think if people could understand what's in that one lesson would be, they'd probably be worth more than most of everything else they know about economics for
It would
most
shut
people.
down most of your talking heads on TV. I mean, right? Like just like
Yes.
what are you talking about? Like this is just some basic logic. It's an easy book to read. It's for a non-intellectual like myself. It's a book I highly recommend that you check. Hey, you know what? Send me an email. I got a whole box of them up here. I will mail one to you personally. It's not a joke. Send me an email, sam@brickeninvestmentgroup.com. I will mail you a book, Economics in One
Does,
Lesson.
does that go for my listeners too? Because I think that's
Yes.
beautiful. All right.
Yes. Yes. I've got lots of copies. It's an easy read. I mean, it's a bathroom reader. It's like one of those where you can 5 minutes read a portion of them, like, okay, hey, that's great. I just learned something here in the last couple minutes.
Yeah. Love it. Beautiful stuff. Well, one thing that I feel like I have to ask you before we move on to our lightning round is what is one thing that is wrong with the way most of your colleagues approach the industry? Something that you think that is either wrong in what they believe or how they do it. What's one thing you do different?
Yeah, I wouldn't say people do it wrong necessarily, but this goes back to probably the things we've talked about earlier, which is, and it's something I've done, I'm guilty of, but raising money for other sponsors, but like, okay, so yeah, raising money for other sponsors, but not necessarily having any direct say over how the deal is run. Like if you're, and I don't know what your model is, George. So if I'm offending you or stepping on your business model, tell me, and we can delete
No,
this
not at
out.
all, because it's all about different ways of doing things. We could, even if we completely disagree, we could both be making money.
I see a lot of people raising capital for other sponsors because that's the easiest way to get into the game. Here's a case in point. I had lunch with a guy, smart guy, smart doctor here in Memphis. He travels all over the country. but he's getting into syndications, right? And so then he goes out and raises a whole bunch of money. I mean, a whole bunch of money from all of his colleagues for a very random apartment complex in a very random city that somebody came to him and said, hey, you know, this is going to be a great investment. And the brochure was shiny. It looked great, right? It looked great on paper. And I looked at it and my stomach just kind of went, oh God, no, please. That's going to be awful. I couldn't tell him that, right? But because he doesn't yet understand kind of all the dynamics of the market, hasn't been in it that long, he may be assuming an incredible amount of risk for him and his investors. Again, something I have done personally that he's not aware of. And so that's what I see as kind of there's this push for brand new people in the space to go out and raise a bunch of money, which they can do because their friends and family trust them, not necessarily the deal or the sponsors, but they're like, oh, hey, I trust Sam. Why not? And so that's a risk I see being taken. And I think it's going to hurt a lot of people. And it's certainly, again, you know, one of the mistakes I made early on, and it's affected other people in my circle of influence. So that's a personal, something I just see that, you know, I just don't agree with anymore.
Yeah, I love it. Well, definitely staying in your lane, working with sponsors that you understand very well, sticking to the markets that you fully understand.
Yep.
I know, for example, I'm from Detroit, and that's a very textbook example of how you really have to know your market. If you invest in Detroit, I mean, it's street by street.
Yep.
And you can see, like, literally last time I went to Indian Village, just beautiful. Like one street over, not so much. And then there's the new Indian Village, which is, somebody else might call that Indian Village, but it's not quite as nice as the old Indian Village.
Right.
And, you know, like literally, it's not even knowing your neighborhoods. I mean, like literally, you need to know the streets. You
Yep.
better have driven it before you even consider submitting an LOI, or you may have to just snatch it right back.
Right. Right. No, that's spot on. Correct. Yeah. That's exactly it.
Yeah, I hope my Detroit investors, I hope you're driving the streets, and you should do that, of course, anywhere. But that's an example of a market where, like, it is, like, I've never seen cities turn from beautiful to rough so quickly.
Yep. Yep. That sounds a lot like Memphis, actually.
All right, well, awesome, Sam. I think that all great things have to come to an end, and so with that, let's kick it up to the next level. Let's head into the lightning round. I've got 7 questions that I like to ask all of my guests. You ready?
Yeah, let's do it.
All right. Sam, if you could have a billboard, what would it say?
Life is short. Make it count.
What is the greatest lesson in leadership you've learned as an entrepreneur?
Greatest lesson. Oh man. Let's see. Greatest lesson as an entrepreneur in leadership, man. I mean, it's kind of just the way we were raised, but I'm not afraid to get my hands dirty. Like, yeah, if I'm asking you to do it, be rest assured, I have already done it, and or I'm going to do it right next to you if I need to. So
Great experience, a great teacher.
Yep.
Okay. What personal characteristic has been pivotal to your success?
Just don't stop. I don't know what that characteristic you'd call it, but there's many days, many times that you want to just sit down and go, oh my gosh, what have I done? Or I want to just quit. And it's like, no, you don't quit. There's no quitting.
I love that. Determination, stick-to-itiveness, whatever you call it, it's important. All right,
Yeah.
I like to spice things up with a random question. So just tell me when to stop cutting the deck.
Stop.
All right, top question.
I love it.
Oh no, this has never happened before, but this is literally the same question I asked on the prior show, which I recorded an hour ago. How would you like to spend your elder years? So I'm going to have to go to the second question. Uh, if you had only 5 more years to live, would you change anything about your life?
Oh, absolutely. Yeah. I mean, yeah. One, I mean, I'd probably couldn't up my insurance any, so I guess that wouldn't matter. My family will still be very well taken care of in 5 years when I die. So I'd probably just quit everything, sell it all, and my family and I'd go travel the world until I kicked the bucket, we go have a big time. That would be a great way
That's
to
a good
wrap it
point.
up.
If you knew you had only 5 years left, you really don't have to worry about running out of cash, do you?
No, man, hang it. Look, we're done. We're gonna go just rock it out for 5 years, and then when I'm dead, I know you got a life insurance policy to take care of you the rest of your life, kids and wife. So have a good time.
Love it. Now, can you tell us one thing that investors can do to improve their business today?
Yeah, yes, I would say get outside of what the talking heads say on TV about economics, market, interest rates, and really get a firm understanding of what the debt, if you're coming in as an equity investor, what the debt looks like, who the sponsors are, what their track record is. Go to the asset itself. I mean, if you're going to put $100,000 into a deal, you better sure have been on an airplane ride and been to it and walked it and talked to the current people on the street. I mean, really spend a lot more time doing DD than I think what people are accustomed to doing.
Love it. Some sobering words and a very, very true. Yeah, make sure you know what you're getting into.
Very much so.
Can you name a book that's helped to forge you as a leader or an entrepreneur and tell us why?
Yeah, The Top 10 Mistakes Leaders Make by Hans Finzel's a great book. It's an older read, but certainly one that's worth reading about, where you learn a lot about organizations, you learn a lot about leadership. That's a great one. Or well, I guess you asked for one, so I'll stop.
No, that's beautiful. I love it. And one that I haven't heard recommended on the show before. So I may go out and check that out right after the show, as a matter of fact. Now, can you set us out with a quote to help forge our listeners as leaders and entrepreneurs?
Attributed to Einstein, it said, he said, that which counts, or that which is counted oftentimes doesn't count, and that which counts oftentimes isn't counted. And so carrying that as kind of a, a philosophy throughout life, it's make sure that you are spending your time on the things that count but can't be counted.
Yes, coming from a background in empirical and computational science, I want to say that I think the more you learn about numbers, the more you learn that it's really the qualitative understanding, it's the intuition you build from all of that that matters. Can't say it any better than the man himself, Albert Einstein, probably the smartest man ever to live.
Right.
Uh, I don't know who I'd say is number two, but definitely he makes my list of a number one. And creativity too. I mean, yeah, if you can be that smart with numbers and at the same time be creative enough to imagine what it would be like to run at the speed of light, then I predict you'll probably do well in any field, including physics.
Correct. Yeah, I just finished listening to an introduction to quantum physics, and of course he's quoted quite a bit in there, which is just a fascinating thing. I mean, in the theories and the things he was coming up with now 110 years ago, it's like that guy was way ahead of his time.
Yeah, amazing. Yeah, I love it. Well, for those of us who want to reach out to you, email, website, carrier pigeon, or smoke signals, what is the most effective medium?
Morse code.
Okay, good.
No, I'm kidding. Most effective medium, although I would learn to love Morse code, I think it'd be great, is
Yeah.
Sam at Bricken Investment Group. That's BRICKEN investmentgroup.com, Sam at brickeninvestmentgroup.com. Shoot me an email there. You can go to our website, but as you've probably heard here on this show, we're not raising a whole lot of capital. We do have room for private lenders on very specific deals. That's something, you can reach out to me, get put on our email list, and we can talk about that if that's something that's of interest to you. But the best way, again, is just to shoot me an email. You can go to our website, but there's really not a whole lot there that other says, hey, thanks for visiting, and here's the podcast episode. So that's the best way. Shoot me an email.
All right, love it. Well, thank you so much, Sam. Beautiful and insightful interview. Thank you so much for taking the time to share your knowledge and experience with our audience.
George, thank you so much for having me on. This was an absolute blast.